All right, let's dive right in. We're unpacking the real estate market in Pico-Robertson, Los Angeles. You know, the 90035 zip code. Now, you hear Pico-Robertson, you probably think great central location, lots of demand, right? And you're not wrong. But the numbers are telling a much, much more interesting story than just that.
Okay, so the first big number that jumps out is the Market Action Index. It's sitting at 39, and the rule of thumb is anything over 30 is a seller's market. So on paper, this looks pretty simple. Supply's tight, and sellers are in the driver's seat.
But is it really that simple? No way. That one number, it doesn't even begin to tell the whole story. And in a neighborhood as specific as Pico-Robertson, you really can't just look at the headline. It's just, well, it's misleading.
And here's why. It all comes down to one thing: price. In this neighborhood, accurate pricing isn't just important, it is everything. The price you put on a house literally creates two completely different realities. It dictates the entire journey that home is going to take on the market.
So let's get into it. We're going to start with the biggest piece of the pie, single-family homes. And trust me, this is where that story gets really compelling.
So you see the median list price. It's just shy of $2.5 million bucks. Wow. But here's the thing. That number's a little skewed. It's getting pulled way up by a few really expensive listings. The real action, where most of the deals are actually happening, that's a different story. And this is the number that really matters, the price per square foot. It's around $1,025. Let me tell you, this is what savvy buyers are laser focused on. They're not looking at some big, flashy list price. They're doing the math right here. This is the real benchmark.
And boom, here it is, the tale of two markets in one simple slide. Look at that difference. If you price it right, near that median, you're sold in about 63 days, 2 months. But if you aim too high, you're sitting for an average of 139 days, maybe more. That's over 4.5 months. It's just night and day. It really shows you pricing right isn't just a good idea here, it's a command.
And this chart, it shows you exactly where the party's at. See that huge bar on the left? That is the sweet spot. We're talking 1.75 to just under $2 million. That's where homes are absolutely flying off the shelves. These are folks maybe moving up from a condo, or they got priced out of Beverlywood next door. They are ready to go, but only if that price is right. Okay, so let's switch gears and talk about condos, because this is a totally different narrative. If the single-family market is this weird race with a fast lane and a slow lane, the condo market is kind of like, well, everybody's just taking a leisurely stroll. I mean, look at this contrast. The price per square foot is way lower, around $692. But the time it takes to sell, a median of 154 days, that is a long time. It's more than double what a well-priced house takes. It just tells you right away the condo buyer is a whole different animal, much, much more cautious. And it makes sense, right? If you're buying a condo, you're not just buying the unit, you're buying into the whole building. So you're looking very closely at things like HOA dues, the building's financial health, how old it is. That's why the real demand is between $700,000 and $900,000. You start creeping over $1 million for a condo here, and things get very, very quiet. Now, for the investors out there, let's look at the playbook for multifamily properties. We're talking duplexes, small apartment buildings, that kind of thing. And yeah, this is a whole other ballgame. Here's a really clean breakdown based on what's actually sold this year. And the main takeaway is right there at the top. The most action, the highest transaction velocity, it's all happening in those smaller 2 to 4 unit buildings. Now, before we get into the nitty-gritty numbers, just a quick definition. You're going to hear the term cap rate. All that is, really, is your rate of return. It's basically how much money the property makes you each year compared to its price. Think of it like a yield on your investment. Okay, so in Pico-Robertson, investors are typically seeing cap rates between about 4.5% and 6%. And if you're hunting for a duplex specifically, the data shows that most of the deals are getting done right in that $1.25 to $1.5 million range. So after breaking down single-family homes, condos, and multifamily buildings, what's the bottom line? What do you really need to take away from all this? I think the best way to look at it is that each of these market segments has its own personality. For single-family homes, the personality is precision. You have to nail that price. For condos, it's patience. You gotta expect a slower pace and buyers who do their homework. And for multifamily, the personality is focus. The real action is in those smaller buildings under $2 million. And that leaves us with a final thought. When a market is this specific, this divided, and this driven by price, is the data just a map to help you find your way, or is it something more? In a place like this, the data isn't just describing the market. In a lot of ways, it is the market.